Yo, my people, let's talk about the real deal, how to grow your money. Forget the get-rich-quick schemes. We're building wealth that will last, just like a well-crafted kente cloth. I've been looking at some top investment strategies and I've broken down the best ones for us in a way that just makes sense. 1. The buy and hold strategy. Plant a seed and let it grow. This is the most straightforward approach. It's like planting a mango seed and leaving it to grow into a big tree. You buy an investment like a share in a company and you hold it for a long time, sometimes for years or even decades. You ignore the day-to-day market noise, the small ups and downs, and trust that over time, the value will increase. This strategy is great because it's passive. You don't have to be checking your phone every 5 minutes. It's perfect for those with a long-term goal, like saving for a house or retirement. 2. Diversification. Don't put all your groundnuts in one basket. Imagine you have a basket of groundnuts to sell. If you put them all in one bag and that bag gets a hole, you lose everything. But if you divide them into different baskets, even if one gets a hole, you still have the others. This is what diversification is about. You invest in different asset classes like stocks, bonds, and real estate. This way, if one area of the market is doing poorly, your other investments might be doing well, which helps reduce your overall risk. 3. Dollar cost averaging, DCA, the consistent Susu method. This is the strategy we talked about before. It's the most beginner-friendly way to invest. You put a fixed amount of money into an investment at regular intervals, e.g. GHS 500 every month, no matter what the price is. When the price is high, your fixed amount buys fewer shares. When the price is low, your fixed amount buys more shares. Over time, this helps to lower your average cost and takes away the emotion of trying to guess the best time to buy. It's consistent and reliable. The more active strategies. There are other strategies you might hear about, but they are a bit more advanced and risky. 1. Market timing. This is the opposite of buy and hold. You try to predict when the market will go up or down to buy at the bottom and sell at the top. This is extremely difficult, and even financial experts struggle with it. 2. Investing in growth sectors. This is for aggressive investors who are looking to get big returns by putting money into industries that are growing quickly, like technology. This can have high rewards, but also high risks. For a young investor like me and you, the best way to start is with the simple, proven methods. Focus on dollar cost averaging into a diversified portfolio and commit to the buy and hold mindset. Build a strong foundation first. The more aggressive strategies can come later, once you have more experience and capital to work with. Remember, this is not a financial advice. Be sure to do your own checks before you proceed. Ready to start? Drop START in the comments below. Let's grow our wealth together. Like, share, follow, and subscribe for more investment tips from the nerds.